Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. Well, since the rejection last week of the 73-cent 60-day simple moving average, the Australian dollar bearish sentiment has lingered. Along with that, with the post-FOMC rate decision, renewed selling has failed along with weaker commodity prices, and it's limited the top side at this stage around 72.4060 as a preserved cap. Today we do have the RBA monetary policy announcement at 2:30. Despite the central bank is not expected to say or change any initial to their statement and keeping to the script, I do expect to see the rates remain unchanged at 1.5%. Looking ahead though, we could see from the statement some updates on the US and China trade tensions as ongoing uncertainties remain to be heightened. At present, my call that is still towards 71.95 to 71.65, with the objective holding around 70.95. Well, the euro still remains relatively weak after the market took out the support at 116.90. The bears have come in many numbers and now look towards 115.2030 as a new target before any reassessment. It is assessed, though, that from this region that the market should or may see some profit taking. But you can see from the break, it did confirm the outside range day, the long-legged doji of indecisiveness, and with the weakness, along with the MACD, does support the challenge. If you are trading from the short side, I do recommend to lower your stop losses, just in case we get a sharp turnaround. But it's unlikely, as the dollar index is now about to claim the 95 handle, looks back to the recent highs of 95.65, and a break above there would give us further scope to 97 to 98 to the index, which in terms would see the market fall towards the 113 region for the euro. Looking at the weekly along with the dailies, you can see that the market is still very heavily remaining to the down case, because of the fact is that we are overheating from the ADX, some divergence from the RSI, and from this morning's rejection of 114 could pose further threat. Now we would need to see a break of the support level of 113.55 to give us renewed assurance that the market has found a potential top and looking back towards the region of 112.6075, which is what I favour. Well, with the uncertainty still with Brexit, and along with Theresa May saying that there's still no deal on the table, according to news reports in the Sunday Times in the UK, Theresa May is facing dwindling cabinet support for her strategy to revert to a no-deal Brexit for the European Union. The UK paper did also say that the support for her strategy of using a no-deal as a fallback negotiating strategy with the EU permanently hangs the UK's odds of a successful deal with the EU. I view the market now taking out the supports of 130.60, looks towards the region of where this safety net holds at 128.4080 and really assess from there. But this doji should put further case to the downside, along with the MACD after breaking 2 days ago to the downside. Gold still trading sideways. Since a break of 1,189 to 90, I still favour the market will fall towards 1,176 and reassess from there. Any advances on the day should find resistance now seen around 1,192 to 97, but as I say, the market is still looking for further weakness from a technical point as the MACD holds to a negative case. Well, oil surges to a 4-year high as the sound of the bulls come in heavy numbers due to the fact that the concerns have heightened with Iran's sanctions that are only around the corner to be imposed. The price surged overnight from 73 through 73.1535 and peaked at a 4-year high of 75.60 in response to a trade deal reached on Monday by the United States and Canada to replace the North American Free Trade Agreement. Along with this is that with new sanctions about to be placed on 4th of November, could see a little bit more shortage of oil. If that's the case, we could see a further rally. Some people have a view around $80 a barrel. At this stage, I don't have a view, and I would rather wait and see further confirmation. Now, close above 75.75 would give further scope towards the top side around $80 a barrel. But let's see if this is the case. As a close under 74.50 may negate this view. So let's see how it plays out. Well, that wraps up for today. Thank you very much for joining me. And as always, look out for the intraday report. And I hope you enjoy the rest of the day and a new start to the new week.